Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as we begin the new year with first trading day of the week and the new year, the markets are holding up in the green. And as I speak to you this Monday morning, to give you some levels on the market, Sensex is up 215 points. 61,050 is the level on Sensex. Nifty is up about 60 odd points. 18,165 is the level on Nifty. And the Nifty Bank up 290 points. 43,280 is the level this Monday morning as I speak to you on the markets. Well, historically speaking, the month of January, beginning of the new year, traditionally has been a little bit subdued, but let's hope the events in the backdrop within which we are working with, we expect a little bit of higher levels on the for the month of Jan, especially given the historical data. Not to forget, friends, next week onwards there will be a curtain raiser for the third quarter earnings this financial year, starting with, of course, TCS, and the rest of the companies will follow. It is going to be very interesting to watch out for the earnings season because the opinions are divided equally on both sides. But let us hope that there is a little bit of a better color on the earnings front, which will keep the markets excited. On the unlocking theme, as far as China is concerned, there is positivity for one particular sector, and that is metals. And of course, unlocking in China, if everything goes by what it has been said, the news flows coming from China as far as COVID is concerned, then supply side constraints will also get resolved as we go forward from here on. One number that I want to speak to you this morning is the GST collection. It has come in at about 1,50,000 crores, which is 2.5% higher compared to the month-on-month numbers. So this is one particular positive, and expect if the new normal is set in, the collection as far as GST collection is concerned, we expect better, higher numbers going forward from here on. News flows on COVID front will keep all the markets, whether it is our markets or global markets, in check. But hoping whatever is being told to us by the respective authority, and if there is no further escalation, then possibly we could ride this particular negative news flow with some kind of stable bias. Given the fact that there is expectation on earnings front, then you will have the budget unfolding on 1st of Feb by the Honorable Finance Minister Srimati Nirmala Sitharamanji. There are going to be expectations that are going to be built up as we go closer to the budget day. Of course, then it will remain what is delivered by the finance minister and what is the fine print of the budget and how do we dissect that. This will possibly be known as we have the budget in front of us. But overall, friends, the year gone by was pretty challenging. There were flat to positive return as far as the index is concerned. But if you have to take a leaf out of this, then when you compare the performance of Indian equity markets vis-a-vis some of the emerging markets and developed markets, then we have done relatively better in the factors that we gave a positive return, though it was flattish, but we did give a positive return. Rest of the markets, whether it was emerging or developed, gave negative returns. There is going to be an overhang in terms of geopolitical situation. There is going to be an overhang in terms of recovery in earnings, GDP growth rate, interest rates, and inflation rates. I think these are some of the points that markets will be keenly watching out for. And just in case if most of these data points are supportive as far as the domestic data point is concerned, then I think the markets will take it with both hands and you will see better performance coming through from the equity markets. Overall, friends, as we always advise you to look at investment opportunity, and every time that we interact, we give you some investment ideas. This time as well, there are two investment ideas. Both are from a relatively not so spoken about sectors and maybe an underperforming sector. But given the growth opportunity as we go forward and improvement in earnings, I think one should look at some of the names in this particular sector. So the first one is from the life insurance pack, and ICICI Prudential Life is the company that we have a positive coverage on the fundamental from a long-term point of view. And insuring the uninsured, I think the theme that has picked up on the backdrop of the pandemic, that is COVID-19, I think more and more people are realizing that they don't only need insurance, life insurance, but they also need to have a larger sum assured just in case if some eventuality has to come through. So the first pick is ICICI Prudential Life, and the second one is from the infrastructure stroke construction space, and the name of the company is NCC Limited, a relatively smaller name in the construction stroke infrastructure universe, but the order book is quite strong, and we expect for the order book to increase going forward from here on. And our sense is that on fallback of execution of that order book, earnings is likely to improve, not only for names like NCC Limited, but also other infrastructure stroke construction related companies. So these are the two investment ideas, friend. ICICI Prudential Life from insurance, life insurance space, and from construction stroke infra, NCC Limited. Thank you very much for your patience hearing. I'll see you again next week, and wishing all of you all a very happy, healthy, and a prosperous new year. Thank you.